Hi traders, and welcome to the very first webinar by Vertex Investing. My name is Tanzan, I'm one of the head traders at Vertex, and today I'm going to explain a little bit about what we offer at Vertex and explain our ideology and methodology behind our thought process when we trade. Now at Vertex is open to everyone, from beginner to veteran, because what we do is we focus on you. Okay, and I'll explain a little bit about what we offer further on in the video. Now, many of you here for the free strategy, and I can assure you that you will walk away with value, because this strategy will probably smash any strategy that you're using at this very moment, because you can back test it, you can forward test it, whatever you want to do with it. Make sure you make notes from this video, because you'll be able to know how to enter, how to exit, how to identify your setup from this very webinar. Obviously, it's not our refined method. However, this strategy itself is pretty much a foundation of where we began. And from there, that we continued to refine our entry method to the point where we've got a step-by-step system on how to enter using our refined method. We won't teach that in this webinar. That is for the course and for our bootcamp, which I'll explain a little bit more about, because it's a new thing that's coming in 2021, which is why we've done this webinar. And of course, this webinar, we are trying to sell you something, so make sure you stay to the end, because there's an offer for you. But sit back, relax, and make sure you take some notes if you need it. And I hope you enjoy the rest of this webinar. So, welcome to the very first webinar. So I'm going to explain a little bit about us to begin with. So who we are. So Vertex comprises of 3 traders: myself, Tanz, Ben and James. Now Ben actually founded Vertex, and then what happened was me and James, we used to work together, and then we all became one. And the reason we've done that is because each one of us has a unique perspective of the market. So we've come together to share the different perspectives and allow traders to find what works for them. So Vertex isn't just about one strategy and one method. We will show you several ways to view the market, purely because what works for us may not work for you. But we have tried and tested several strategies that we've used in the past, and we will teach you every single one. Okay, I'm not saying there's many, because you can only focus on so much, but you will find something that works for you within Vertex. Now, the reason that we've actually come together, even though we're completely independent traders, we're quite passionate. Well, we're very passionate about teaching, and we thrive on our students progressing. And we believe that the support and guidance that we provide at Vertex is unrivaled to any other team that I've come across in this industry. So what we offer. So as I mentioned, we don't teach just one style of trading. We have a range of strategies. And as I mentioned, what works for us may not work for you. Same with what works for others won't work for you. Okay? And it was the same with me. I never traded retail because it didn't work for me. But James and Ben, they both traded retail. However, they weren't able to trade mechanically like I was. It's the same vice versa. So we want to show you what you can achieve as a trader, and hopefully with our strategies and with our methods, we can get you there. Now, for a strategy to be effective, we need it to have a statistical edge to become a winning strategy. And what I mean by that is we have done years of back testing and personally used these strategies over our years of trading. Collectively, we have about 20 years of trading experience. And we have done years of back testing to understand what is good and what isn't, and what works and what doesn't. So hopefully we'll find something for you that is personal for you, and something that you can interpret in your own way and become an independent trader, as that is our overall goal. So the reason you're here is obviously to learn about a high risk to reward method. Now this is our main strategy. Our main strategy is based on smart money concepts. Now we only see it as an ideology. We don't claim to trade like the banks and institutions. To be honest, for me, that phrase that people say all the time is ridiculous, because you can't trade like the banks, you can't trade like the institutions. We are retail traders. We just can't do that. But we can extract information about what the institutions do in order to build a strategy around this, which is exactly what we have done. Now, they leave obvious footprints behind, and that's why we capitalize. Now, smart money concept is not a new concept at all, and what I'm about to show you is not overly new. Now, anyone who says they've invented a new strategy is ridiculous. In a €500 market, it's just not possible. However, we will be teaching you our interpretation of what we see as smart money concepts, what's worked for us and several of our students. And I'll explain a little bit about our students later on in this webinar. So the industry standard is a 1 to 2, 1 to 3, or probably a lifetime best of being 1 to 10. Before I started smart money, I wasn't even hitting 1 to 10. 1 to 3 to 4 was my average risk to reward. And that's great. If it's working for you, it's fine. However, you have to realize that there is so much potential to be unlocked, right? And these retail methods that you're probably using are based on probabilities. Even my mechanical methods are based on probabilities. What I mean by that is, and I'll explain a little bit more in the next slide, is they are based on, for example, patterns, what frequently happens in the market, rather than market facts and what actually happens. So at Vertex, we don't take a trade that does not have a potential of 1 to 10 to risk to reward as a minimum. So just take that in. It is ridiculous. So because there's so much potential to be unlocked, and most of you have no idea. And once you try our method, especially what I'll teach you today, you won't want to look back. So probabilities. Now I can sit here and discredit all retail strategies. However, I would not do that, purely because although my strategy before was mechanical based, it was around a retail strategy. And it worked for me. I'm not saying that it doesn't work, but I'm just saying that these are based on probabilities, and working on probabilities and against actual market facts, it just doesn't make sense if you think about it. And for me, I did what every other trader, new trader would do, and go for whatever baby pips would teach you about how to enter on the third trendline tap, the golden fib ratio, the moving average 50. Things like that. Now I'm going to show you why they don't work, and how we view the market later on in this webinar. But for example, we trade based on reason. Now, if you're using a retail strategy, a reason of you have a high chance of winning a trade when the fib and trend line MA50 line up perfectly, because this is what pretty frequently happens, right? That's not a good reason for a trade. There's no facts behind that. And for me, that would not give me any confidence behind a trade. Now, I'm going to show you that complete ideology about how we trade, and it will probably make a lot more sense than what you're doing now. Now, what I mean by reason, so we focus on reason and whether a trade makes sense to us. If the trade does not make sense, we just don't take it. We don't force trades. They come to us. Okay, there's so much more to understand about the market that most of you don't have any idea about. However, I'll uncover all of it today. So the market is somewhat controlled, right? It's all artificial, and I'm sure most of you heard the term stop hunt. Okay, now these are real. Okay, there is market manipulations happening all the time. However, at Vertex, we know where these stop hunts are going and why. Not saying that we trade them, and not saying that we know them exactly, but these are one of the footprints that I was talking about earlier that institutions do, because they are there to take you out, right? Because retail strategies just don't work. They do for many, probably a few trades. However, in the long run, there's no statistical edge. Now, we trade high probabilities and facts. We don't trade based on probabilities. So let's take a look at some examples. Now, before we move on, have you ever been in a trade and you've been stopped out by like a pip or two, and then you see price flying or melting in your direction as you predicted? We know exactly why that happened, and I will teach you that today. So let's look at this. Let's look at this price action. So this is GBP USD, right? So we can see there's a clear downtrend. Is very obvious what we can see. Now, most of you probably thinking about selling, right? So let's see what a retail trader would do. Now this is now with the help of James, I actually marked this up. As I said, I never really traded retail, so I wasn't sure how to actually do it. But this trade will give you a 1 to 3.5 risk to reward if it wins, right? All the confluences are there. Let's see what happens. So that's the result, right? Now let me show you how we would see the market. So this is the trade that we actually took earlier this year. So this trade hit a 92.5R in the space of 26 days. But as you can see, we saw the market direction completely different, because using trend lines and all of those retail things, it will ignore a lot of what is actually happening in the market. And this is what we're going to teach you today. So, because I know with our risk to reward, it sounds fake. It doesn't sound right. You know, you can, like, if you think about it, if you risk 1% on that trade, you've just made 90% of your account. And it just doesn't sound right. But this is what we're going to show you today. So we're going to show you how to be able to do this. So as you can see, the difference between our entry and the entry we're going to show you, however, it's still far better than any retail strategy that you will use. So this trade actually will give you a 22.5 risk to reward. And I'm going to show you exactly how to do that in this webinar. So, and I'm being serious. You will walk away with a strategy completely free and be able to hit milestones that, you know, you'll probably never achieve with any retail strategy. Okay, you'll realize the risk to reward potential is ridiculous once you backtest and forward test the strategy I'm going to teach you today. Now, as I said, it's not our refined method, because that is obviously for our course, but this strategy is the foundation of where our method begins, right? And it's incredibly effective. So let me show you a few more examples. So this is a retail strategy. Now, as I said, this is a trade done by James. And James, as I said, he was a very good retail trader until he switched. So he's very good at finding these setups. And this is a textbook setup from him. Okay, all the confluences are there. We've got a trend line, we've got EMA, we've got fib, we've got structure. Okay, we've got a bullish engulfing candle, which is what I used to trade off. All right, but this trade hit stop loss. But let me show you how we see the market. So we view the market very, very differently, and we ignore all the noise that a retail strategy would provide. Now, this trade gave us a 1 to 74 risk to reward that James actually took. I didn't take this one, but James actually entered. Let me show you another one. So this one, you've been stopped out, right? But you're most likely correct. This is how we saw the market, and this is a trade that we actually took. And you can actually see these trades breakdowns on our Instagrams and our free Telegram group. So this is a trade that James has taken on New Zealand dollar. Can you see the sheer difference in that? Now, we aren't claiming that we win all the time, because we don't. In fact, our strike rate may be less than your retail strategy currently. However, our risk to reward, I guarantee that it will surpass any retail strategy that you can think of that you are using currently. And that is the main thing, because say, for example, you won one trade, which is 1 to 100 risk to reward, you will need to lose 100 trades to be back at break even. How ridiculous is that? So look at this trade. So this trade worked out perfectly for a retail strategy, right? It's very clean, the setup is perfect, and it won, right? But let's see, look at our entry. Look at the precision. So we will show you how to enter exactly when the market reverses. That's the difference. So imagine catching a 200 pip move, right? If you catch a 200 pip move with a 100 pip stop loss, that's a 1 to 2. However, imagine catching that same move with a 2 pip stop loss, a 2 to 5 pip stop loss even. I'm not going to work out the risk to reward because I can't do that on top of my head, but you can imagine the difference, right? So let's start teaching you the strategy, and this is what you're all here for. But before we do that, you need to learn the story behind it. Without a story behind your trade, you will really fail to understand how this method works. So as I mentioned, have you ever placed a trade and this is a standard retail setup, a triple bottom, trend line tap or MA50 rejection, and you've been stopped out, right? And then price flies in your favor. Now, as I mentioned, there's a reason for this, and we know that. So the banks essentially move the forex market. As retail traders, our orders collectively are very small. We can't make huge moves in the market. We're always at a disadvantage. But the banks recognize how retail traders trade, right? And they look for areas of liquidity before creating their desired move. And what I mean by this, with common retail trading setups, such as double bottoms and so on, the banks are able to recognize this and they will move price against you. And if you don't believe me, you can research it. You can see that institutions have been fined in the past for doing this. So if we continue, so this is why, the reason why they do this is because they grab liquidity before creating the overall move. Now, the banks, however, for the banks to do this, they need to trade against you, right? So, for example, if you're looking for a buy and they take you out by selling and then they place their buy, they sacrifice that sell position. But you have to realize that the banks, they don't use stop losses, and it will make more sense when I show you the diagram, right? The banks don't use stop losses. So after they grab your liquidity, and even though they're in profit on their buy or sell trade, they are still in drawdown on their original trade that they've taken to take you out, right? So price needs to come back to mitigate this. They need to mitigate their loss to continue their desired move, because now they've caught all the retail traders out. Now it's time for them to do what they always want to do with price, right? The candle which price returns back to is known as the order block. So let me show you here. So for example, we can see a clear equal lows here, right? And then what's happened? Price was pushed down and then it pushed back up. So if you entered here, okay, you weren't wrong in direction, you're just wrong in your entry. But what happens? Price, even it flew up, it broke several structures, but it came back down before creating a bigger move. But look where it came to. It came to the order block. Now, if you're buying, an order block is the last bearish candle before the impulse. Now, if you're selling, an order block is the last bullish candle before the impulse down, right? And you always have to follow trend. Now, I would keep a screenshot of this diagram because this is a very textbook setup. However, equal lows and equal highs isn't the only way that you'll find order blocks. You'll find order blocks with every break or structure that you have, right? And we generally trade this following the trend. So I'm going to show you how to trade an order block step by step, right? So first thing, you need to find your order block, right? So this is a bullish example. So your bullish order block, right? An order block for a bullish move is the last bearish candle before the bullish move starts, right? So the order block forms following a strong support level or like a trend line break, for example, and it creates a bullish push from there, and that bullish push will break structures, and that's the main thing you're looking for. You're looking for a break of structure to either the upside or the downside, right? Now, for this to be a valid order block, the bullish push, as I mentioned, has to break previous structure. So the previous structure in this example is here. That's the structure that was broken. So that is the OB that we're looking at. So OB is order blocks. Now, what we do now is, now that we've identified the order block, okay, we can either set a limit order at the open or the 50%. If you place it at the 50%, the choice is completely yours. It's less likely to trigger. However, if it does trigger, you get a better risk to reward. If the open of the candle gives you a good risk to reward anyway, then you're more than welcome to use this. Now, whichever you use is completely up to you. I tend to go for the 50% only if the risk to reward is quite high. So I look for a 5 pip stop loss. Now on this as my maximum, by the way. So say for example, if the open gives me a 5 pip stop loss, I will use the open. If the 50% gives me, but say if that gave me like an 8 pip stop loss and the 50% would give me a 5 pip stop loss or less, I will use the 50%. I don't mind missing trades, and you will miss trades if you do use the 50%. Now, me saying that the five pip for me is my max. The strategy I'm showing you today, because it's not the refined method, you might not have stop losses less than 5 pips. However, I'm pretty sure you'll have them less than 10 pips even, which will work very nicely. I mean, it still gives you a solid risk to reward. It's just not the method that we use to enter. However, this is the foundation, and this is what our first point of interest that we look for when we're trading our actual Vertex strategy. But this is the strategy that built our main strategy now. We just have a different entry system, which will show you either in the live bootcamp or the call or the course. Sorry. But once you've done that, you can set your limit order. Your target would be the structural high or the structural low, depending on if you're selling or you're buying. Alternatively, you can just trail your stop loss after every break of structure. Now, in this case, your order block, essentially, you just look for a break of structure, and every candle that you see that's before that break of structure is your order block. For example, this break of structure here, this is your order block. This break of structure here, your order block is this one, right? And so on. Now let's take a look at some examples in a video breakdown. So I'm going to show you exactly how to trade and how to actually use the strategy. And I recommend taking notes at this point, because, or even saving this video, is completely up to you. However, it is best for you to learn. And that's another thing that I want to mention, that at Vertex we have PDFs, we have videos, we have bi-weekly calls. I'll explain a little bit more about what we offer in more detail, but we try to aid any learning any way that you can to help you learn. So we go above and beyond to make sure that you understand the concept that you're looking at. But anyway, let's get straight to the video, and I'll share my screen on TradingView and we'll go from there. So you've come to the next bit, and this bit is showing you how to put it into practice, everything that you've learned so far. So we've learned what an order block is, right? We learned what the ideology is behind our trade, and we should have a better understanding as to how the markets sort of work, right? And now obviously the detail that we've shown you in this webinar is very brief, but obviously when you join our either live bootcamp or when you join our course, you'll have a lot more detail about how to utilize this, and you'll get a better entry from what we do, because we have such a refined entry method that it will not only improve your strike rate and give you a higher probability of the trade winning, but it will also give you a higher risk to reward. I'm not saying that the risk to reward that I'm about to show you is not good, because it most likely is better than any strategy that you're using at this point. Unless you're using smart money, you'll understand it anyway. But if you're not, if you're using tip standard retail methods, then this is going to blow your mind. So I'll get right to it. I'll show you again how to identify an order block, because there's different ways. Because if the first way I showed you, right, is when you get so if I show you from here, okay, when you get strong support and resistance points, okay, now retail traders obviously looking to either buy and sell, are looking to sell here and buy here, right? But sometimes obviously you get a move like this. So you're looking to sell here, and then what happens? Price moves up and then shoots down, right? But then what you realize is price would come snap back and then continue that huge impulsive move. Okay, I didn't mean to do that last bit, but it will carry on this huge impulsive move, right? Because what's sitting here is the order block, all right? And that's what I explained in the first section of this webinar. Now, if I show you a different way to identify order blocks, is there we go. So when you get a trend, right, like this, okay, what you would typically do is get your fib. Right, let me just adjust my fib for you. 618 1786 0. Okay, so you'll get your fib, right? And oh, I'm almost drawn this perfectly, you know. Right, so you'll get your fib and you'll look to enter at some point here, right? So inside this golden pocket or whatever it's called. Okay, I didn't trade retail, so I'm not too familiar with the retail methods, but I'm aware that this is some sort of golden ratio, right? So you'll enter probably here. I'm not going to put the long position tool, but you enter here and you'll place your target somewhere structural on your structural highs, for example, right? Or you just trail your stop loss. But look at the size of this, right? Like the size of this that's huge. That's big. Normally that's like a 30 pip stop, right? Or sometimes you put your stop loss below the low, so it'd be like a 50 pip stop, right? And those of you who are using retail strategies would understand that, you know, you'll probably think that those stop losses are pretty conservative. The thing is, they're not. For us, a 10 pip stop is conservative, right? But our entry for this same situation would actually just be would be catching the exact point that it reverses, right? Because there's an order block sitting here. So for an order block, to identify in a trend, the order block for a bullish move is the last bearish candle before the bullish impulse, right? And that's what I'll show you here. And the same thing for if you're going the other way. Okay, if you're going the other way, okay, it's going to be the last bullish candle before the bearish impulse. There's an order block here, order block here, order block here, right? Same thing here, order block here, order block here, order block here. Okay, and those are the ones that you probably come across a lot when you backtest this strategy. If you're going to follow the trend or counter trend, it's completely up to you, but that's how you identify an order block in the trend. So when you get a breaker structure, so if we look at this situation, right, so breaker structure is happening here. Okay, now if you're struggling to understand that, you might want to go over structure yourself, because if you don't understand structure, then you will struggle understanding how this strategy actually works, right? Because structure is key. Because I know that a lot of smart money traders would use Wyckoff. The reason that we don't use Wyckoff or Wyckoff, however you say it, is purely because it's just structure. That's all it is. It's nothing. It's nothing special. For example, you can label out your Wyckoff very differently, and sometimes you will label it. Your labels will be very subjective. Well, it is subjective because it's what you would believe. For example, we've got a breaker structure here. Some people would think this is the spring and then it continue the impulse, for example. Okay, don't quote me on that. Or is that? But then what happens next? This point comes and breaks structure, right? So you're probably thinking, oh, now this is the spring of Wyckoff. Now, if you don't know what I mean by the spring is basically the last for an accumulation. So for a buy, essentially. You get like a wick down or a move down and then an impulse up, right? And that's called a spring. Now, some people would say that's a spring, or now you would probably say this is a spring, right? Obviously, there's a lot more to Wyckoff. I'm just explaining that why we don't use it. We just follow what the structure is actually showing us. So, as I said, we try to make things as simple as possible. And as I said, this is what we're going to show you in our live bootcamp and our course, because obviously I'm not going to show you as much detail as we would here, but I'm just going to show you how to use the strategy, right? So now that we've identified the breaker structure, we need to identify where the structure break actually happened. Now, obviously, this is an OB, right? Because that's the last bullish candle before the bearish break. However, if you go up, right, we can see that there's two more clear points of interest, because we're not trading off these OBs, because if we trade off a daily one, our stop loss is going to be huge, right? Now, if you start from the top, because whenever you get a clear breaker structure, so this is a major breaker structure, right? You need to find the most extreme point where price is actually going to come to, right? The reason why I'm not looking at this is because if we look, right, this move did not break any structure. However, if we mark out this one, which is the OB that we used, now this was a trade that we actually took. It was actually a trade done by one of our mentors, James, who you'll meet in the bootcamp or in the course. You'll meet him in our community group. But this was the POI. The reason being is because this impulse broke this, this structure, and this structure. Now this class is a minor structure, and of course we'll explain it in a lot more detail within the course and the bootcamp, but that was our point of interest. Now all we need to do is flick through the time frames and try and identify a clearer point of interest. So if we go through different time frames, it's up to you what time frames you want to go for. When you find one that is quite clear, that's the one we're going to use. And what do we see? So we can refine our order block to now this. Now what you want is a very clean order block. You don't want any of this messiness. You don't want anything like any of these consolidation periods. You want a nice clean order block, right? That's what you want to look for. Now at daily, if I show you quickly, if we go back to the daily, so this daily OB, the stop loss would have been 43 pips, let's say. The hourly one would give us a stop loss of about 9 pips, right? Now that we've identified our order block, okay, now that we identified the order block, let me get rid of this. All we need to do is set our limit order. Now, to set a limit order is very simple. You just set it at either the open or the 50%. I'm going to use the open for this example. And you put your stop loss just above the high, so just above, and your entry is going to be, for me, it's going to be at the open of the OB. If you use a 50%, it's less likely to trigger. However, when it does trigger, you have a better risk to reward. But it's not a huge thing. Now it's about setting targets. So if we look at what's happening on the daily, so let me go to the next candle. So obviously price has gone back. I don't think it's triggered, I'll trade it, no. But what we need to think is when we're looking for our point of interest, well, our targets, we need to find where the nearest OB is. Now, the reason why, I didn't mean to do that, the reason why this is going to be our partial taking point is because price can easily reverse up here from here, right? Because as we can see, price is going to break this structure. Well, it has broken this structure, right? And potentially this could be point of reversal, but for it to become a bullish move, you have to come back and tap this OB before continuing, right? But my overall TP is going to be this structural low, which is here. Okay, simple as that. Now if we go back to the hourly and if we see what's actually happening, let's watch this play out. So it's not triggered just yet, but we just need to be patient and understand. There we go. So it's triggered, very minimal drawdown, and our TP is obviously going to be down here. Now this will give you a 1 to 25 risk to reward, and that's a solid risk to reward from minimal effort, right? Now if I show you where price actually has gone to, so we've reached our first target, right? And that's why we're going to take partials off. So we're going to take partials at 1 to 20 risk to reward. What you decide to take partials is completely up to you. You know, it's completely your choice. What we do is tend to take either half of it off if it's a major point. So I would take half of my trade off at this point and then hold the rest and see what happens. Some people close 90% and then keep 10% running without a TP. That's completely up to you, because why you could remove your TP here is because there's no sign. If this breaks this structure, right, price is just going to continue going down, right? It's got no point to go up. And if we're thinking about it, where price can actually reverse from, so if you go to the weekly, and I know I'm adding a lot more information here, but if I'm showing you that there's probably something in this wick that price can obviously reverse from, but I can't see anything that's clear. So price can just continue going down because at this point, there's no indication of changing in trend, right? The only thing that we need to look for change in trend is a reaction to an OB. However, we've not had that. But if we follow what's happening now, so this is where price is currently, you know, I'll just exit this mode. So this is where price is currently, so it's running at roughly 1 to 15, which is solid, right? But we've hit 1 to 20 in the space of 6 days, right? And some people are holding swing trades with a 1 to 3 target with some retail strategies, and that would probably take a month or so just to have a 1 to 3, whereas we just hit a 1 to 20 in the space of 6 days. However, let me show you what our trade was like. So this was our trade. We had a 2 pip stop loss, right? Now our first partial was at a 1 to 100, and our target is a 1 to 124. Now can you see the difference? So if you join our bootcamp, if you join our course, you will learn how to go from this to this. Now obviously some people are happy with this, that's fine, but look at the potential that you can have. And this was a trade that we actually took. You can visit our Instagram to see the breakdown of this trade, but to learn how to do this, you have to join our bootcamp, and we'll show you exactly how to do this step by step. Now as I said, the way I've explained it is fairly simple, and the way I teach it in the course is as simple as I'm explaining it now, right? It doesn't get any harder than this. The hardest point is probably understanding what an OB is. Once you understand that, once you understand the story behind your trades, then the rest is pretty simple and pretty easy. And if you think about it, you have this trade running at 1 to 25, or even our trade running at 1 to 100. If you think about it, if this trade that we took partials, right? So say we took out half, so we took 50 risk to reward, right? Now, if you use 1% risk, you've just made 50% of your account. Now, for you to go back to break even, you need to lose 50 trades. If you use this strategy I've just showed you now, right? So you would have closed, let me get rid of that. If you closed half, right? So if you close, say 1 to 10, so you close 10%, you can lose 10 trades in a row before being back at break even, right? Now, can you see the difference? But can you see the difference in this compared to any other retail strategy? In fact, I'll try and mark out a retail strategy for you. So let's see where you would have entered. So a retail strategy, you probably would have entered, I'm not using an EMA or anything like that, but you probably would have entered somewhere here, and your stop loss would have been up there. So you would have got a 1 to 2 as for the same move. Or if you entered somewhere in between, let's give you the benefit of the doubt and say you've entered at the 71 fib, wherever that is, somewhere around here, a 1 to with the same target, you'll get a 1 to 2. Or if you did place your stop loss just above the 786, as some people do, entry on the 618, you would have been stopped out, right? And can you see this sheer, like, the difference between the way we trade and the way that retail methods are? Now, as I said, I'm not saying that retail methods don't work. I'm just showing that there's so much more potential in the market that many don't know about, and we're here to show you and teach you how to do that. So in the next part of the webinar, we're going to go through why you should join us. As I said, obviously this is a webinar, so obviously we are trying to sell you something, but we've hoped that you've taken away some value from this. And obviously if you choose not to continue and join us, that's fine. You can continue with this. However, you have to bear in mind you are missing out on the high probability, the high risk to reward that we achieve by having a sub 5 pip stop loss, whereas with this, what I've just shown you, you'll probably have a 5 to 10 pip stop loss, which is fine. However, just look at the difference between what you had here and what you had here. So the difference was, so this is 100 risk to reward on this, whereas you had a 1 to 20 risk to reward, right? So you can tell the difference. We have a 5 times better risk to reward than you would have with this strategy. However, it's completely up to you what you decide to do, but stick around for the next part of the webinar so we can explain a lot more about what we can offer. And we hope to see you soon, obviously in our bootcamp or in our course. But yeah, all you have to do is simply follow the trend, find your OB, find the breaker structure, refine your OB to whatever time frame suits you, place the trade, target structural highs or lows depending on whether you're buying or selling, and you go from there. To find out more, obviously join Vertex Investing, and we'll be happy to explain it and teach you in a lot more in a lot greater detail. So now that you've seen the video, it seems simple, right? Now that's because it is. However, that's only half of the story. So what I've just shown you is the basic strategy that built our overall main strategy, right? Our strategy has a unique entry system that will give you a higher probability and a higher risk to reward, as I've shown you in the video. So what are the next steps? Now, if you're not happy with today's training, or maybe you are, because this could be, as I said, I want to try and make it as valuable as possible. You don't have to continue. However, I do recommend that you stay to the end of the video just to make sure that you get an idea of what we offer at Vertex. However, you don't have to join us. That's fine. It doesn't matter. What you can do is take away the strategy that you've learned today and hopefully be a better trader. Okay, we're not holding you to anything. You are free to go. However, if you now trust us and want us to help you along your trading journey, then we have a special offer for you as a reward for just joining our very first webinar and potentially joining our very first bootcamp. So we're going to teach you how to refine your entries, right? So you can go from doing this. Right, so this is the trade that I showed you in the video to doing this, right? And this was a trade that James actually took. And as I mentioned, you can visit our Instagrams, visit our highlights, go to our free trading group where we will show you our entries, we'll show you our breakdowns that we've taken these trades. Because obviously with these risk to rewards comes with a huge skepticism whether we've taken these trades or not. But we have full story behind it, we have full reasoning behind it, and we'll show you our breakdowns. And in fact, we share all our POIs to our students because they can just follow the strategy and enter where we do, because we have the same exact entry system, right? So our students can replicate the exact same trade. However, they don't rely on us. We don't share, as I said, we don't share all of them, but some of our students are finding trades for us. For example, at this time of recording, a student actually sent over a point of interest. I followed that point of interest. I took the trade, and it's currently running at 1 to 110 risk to reward at this time of the recording. But our entries actually gives you a lower risk and a higher probability, because it helps us decide which order block to use. Because what you'll realize is when you go back to backtest, you'll probably struggle to understand which order block to take, right? Now, I'm not saying that I've just taught you a terrible strategy, because an order block is very clear, right? Especially the ones that I've shown you in these examples. And once you backtest it, you'll see it. However, some order blocks don't work, and the next entry point will be the following order block. However, we don't enter on every order block. We know which order block to use because we refine our entries and wait for a reaction. Okay, so for our trades, we have more reward, it's a lower risk and higher probability. So I don't see why you wouldn't want to learn our entry method. But obviously, if it's not for you, it's not for you. So we are introducing our boot camps from 2021, and January 23rd to 24th is going to be a 2-day thing. It's going to be our very first boot camp. Now we'll teach you everything that you need to know about order blocks and our strategy, all within 2 days. And it's possible because we don't waste time. Okay, we'll go straight to the point and we'll show you exactly how to trade and enter exactly like we have. We're going to teach you entries, refinement, managing trades, and everything in between. Now, if this feels too advanced, you don't have to worry, because our boot camp is broken down into stages. Our strategy is broken down into small components, and we'll go through each component for you to be able to understand each component before moving on to the next stage. Now, there's several bonuses for joining Vertex, and Once you join our bootcamp, you'll receive the following. So you'll receive our Asian session range strategy, you'll receive the US 30 scalping strategy, and you'll also receive our aggressive intraday strategy. There's several ways you can all use order blocks, and we have refined every single way that we have used ourselves, and this is all included in your fee. Not only that, there's more. So you gain access to our Discord community. Now, I can't emphasize this enough. Our support is what will get you there, because our support doesn't stop at the bootcamp, right? Our aftercare, as I said, is second to none. I don't think any other group will give you the aftercare that we give you, purely because we look for, well, we aim to give you a personal, we aim to give you personal support during your time as a trader. Right, so we're inviting you to join our exclusive Discord community where we are ourselves. We are active daily. We share all our breakdowns. We explain every single trade that we take. We have our personal watch lists. The main thing that we focus on is motivation and psychology. This is often overlooked, but at Vertex, this is a focal point for us. Now, you also have access to our mentors, so myself, Ben, and James, right? And what I mean by this, you can talk directly to us, okay? We have bi-weekly calls that you can talk to us. We will give you a response as soon as possible. And when I say this, I mean it. You'll receive a response within the day, probably within the next few minutes or hours even, because we are active for our students, okay? We don't go out to market ourselves because we don't waste time. We put our efforts and time towards our students, and you'll realize the amount of effort that we put into our students once you join the group. And the main thing is you're going to join a group where you'll have like-minded individuals who will have exactly the same goal as you. And in our community, we will have several challenges, giveaways. You know, we're going to come up with so many different things to keep the motivation and morale high. Bonus 3, you have all our strategies, and as I mentioned, if you feel that order blocks is not for you, which is fine, it may not work for you, but I'm pretty sure the way that we teach it, we can get most of you. I've not come across anyone who said that they haven't been able to understand it. Yes, it may take some time to grasp the concepts, but I'm pretty sure we will get you there. However, we have many strategies that are fully covered by ourselves and we support in the community. So we'll teach you the DAX gap theory, which is my favorite strategy. It's not like the order blocks. The DAX gap theory is purely just for the DAX itself. We have the Vertex EMA strategy, which is one that myself and Ben have created. We have a price action strategy and we have an engulfing strategy. Again, these aren't retail strategies, however, and they are all step-by-step rule-based strategies, same as our order blocks. So you are given set rules to how to actually enter a trade, which will make it a lot easier for majority of you. I know for me, I don't like trading based on guessing where the trade is going to go. We have set rules and discretion behind our trades. We know which direction we want to take the trade. We don't second guess ourselves. Right? If a trade don't make sense, we just don't take it. And I'll explain more once you join Vertex. So bonus 4, as I said, you get bi-weekly community calls. Okay, so you can have access to all of our mentors on Sunday evenings every 2 weeks. So we host community calls for all our members to ask any questions. They can watch us break down charts that they ask us to. We can give outlooks for the coming week, and as I said, this is your chance to ask your questions live, and you get a response instantly. I'm not saying that you don't get the support in the group, because you do. We still give you that response, and sometimes we even make you videos just to answer the question for the week. That's how much effort we put towards our students, which is probably why you haven't heard of us, because as we don't really market ourselves that well. This is probably the first thing that we're actually ever doing to market ourselves, because all of our attention is based on our students and our community. So our community calls also include motivation and psychology trading, which is, as I mentioned, is our focal point because it is often overlooked. And lastly, you get our time. Now, our time is valuable for us, which is essentially what you pay for, because in terms of strategy, anyone can give you a strategy, anyone can give you set rules, right? But without our support, you won't get anywhere. And I mean that, and I've seen it, because we've had people try and take our course and strategy, and then they left, and I don't know what they're doing at this point, but all I know that they haven't achieved what they aim to achieve because they don't have the support. And once they're left, we don't offer any of our support because they've breached our terms and conditions. But they're not exactly achieved anything from it because they don't have the community and the support that we give our students. We give you our personal time and experience to our clients. Right, you'll be supported every step of the way throughout your journey, whether you're experienced or whether you're just getting started. But we have appropriate content for all experience levels. So let's break down the price. So the bootcamp is £1,500, right? So strategies we have are £200 per strategy. We have lifetime access of £500 for our Discord, and any extras are £200 per strategy. We have community calls, which are £65 per call normally, right? However, at Vertex, right, as real traders, we want to make it as appropriate, and want to make the pricing point where everyone can have access to our information, because this is just showing you what our content is actually worth. And this is from a survey that we've done across 50 people, just to give us a rounded figure of what they think our content is worth. However, for you guys today, we've got a special offer, as I mentioned. So you have a one-time payment of £1,000 to have access to our bootcamp, and from there you have access to everything else that we offer. So why would you give us £1,000? Because it is a lot of your hard-earned money, and I appreciate it. I was in the exact same position as you, and I remember I bought several courses and I didn't really get anywhere, but I spent several thousands, well, not several thousands, but I basically blew my student loan just trying to learn how to trade Forex by buying several courses. But I didn't have the support that I was looking for, and I hope that I can give you guys the support that you need. We have hundreds of students take on our course over the years collectively, whether it's at Vertex or not, because myself and Ben, we have taught students separately for a few years or so, and then we came together. So we have several students who have succeeded, and I'll show you a few of them. But we offer support that you won't get anywhere else, and I mean that. You will get our personal support. And if you really want to make a change and start either seeing profit from trading long term, and you're wanting to multiply the money in your account that you already make, this choice, it shouldn't really be something that you think about, because what you're having here is a lifetime skill, right? It's a bit like for me, my background is a physiotherapist, right? Now I wouldn't be able to see my first patient without the 3 years of training, right? And I had to obviously invest myself to become a student. The same thing with Forex. You can't get things quickly. Okay, this will take time, it takes training, and you do need to invest in yourself to progress to get to where you are now. So these are a few reviews. You can go to our Trustpilot to see what our students are saying about us. So you can see a couple here. And this is a success story. So we've got a fair few. I'm not going to go through all of them, but we have Ash. Now Ash has turned everything around. He went from someone who was gambling trades. It's actually ridiculous. And he ended up passing the FTMO. And so far he's had, as far as I'm aware, he's had 2 withdrawals, one of 16%, one of 20%. He passed the 10k FTMO, and those percentages are ridiculous. And now he's going for the 100k funding, and not only that, he's actually paid off all his debt, and that I'm amazed at what he's done. And it's these students it's these success stories that make me feel it rewards me. I love that feeling of having students progressing, because this is why I started teaching with Ben and James, because this is what I want to see. Now, a lot of people ask, how much money can I make? And this is dependent on you. Okay, the amount of time that you take to learn and study all of our content, the better results you will have. Okay, everyone learns at different speeds. Everyone's different basically, and everyone will have a different success story. But the effort you put into trading is the result you'll get out of it. For myself, just to give you a background, I didn't as I said, I blew my student loan. I didn't start from the great position. I was working full time, and the first 3 years or so, all I was doing is taking losses. I went through signal companies course to course, and I couldn't get anywhere. However, I set aside 8 months to trade on a demo before I went live, and the last 3 years I've been profitable, and I've been able to quit work. Although I'm still involved in the physio side, but I'll explain a little bit more about that once you join Vertex. If you want to know, it's completely up to you. You don't have to, but it all depends. I'm just showing you that if you put the effort in, it does pay off, and I want to show you that because myself, Ben, and James, we are live examples of being able to get to where we are by putting the effort in, because we didn't exactly start off in the best situations financially. And I'm not going to talk for Ben and James, but I know I definitely didn't. And I got to where I am by putting the countless hours and effort in. And this is something that we support you at Vertex. Okay, I don't want to see any of my students slipping, because once that happens, you'll fall into a downward spiral. And I've been there, and I don't let any of my students get there. This is another success story, and this one actually is crazy, because so Mike is he's a young lad, and he works 2 jobs as far as I'm aware, and he's only started with us recently. I can't remember the exact date, but this is some of his FTMO results after a few weeks of being with us. He spent, I don't know how long he spent. I remember getting sent videos of him watching our videos over and over, and he's passed several trials. And I remember these are trial pictures that I'm showing you, because he's preparing to take his FTMO hopefully in the new year. And I obviously wish him the best. And if you join us, join our community, you can actually speak to Mike, and he can explain his story about it. But Mike has a family to look after. He has a young baby as well, and he's still smashing percentages like it's nothing. It's crazy, and that just shows you that anyone can do it. It doesn't matter. It doesn't matter your situation. These stories are they aren't unique. We have a number of people that are making unbelievable profits and becoming funded, and this is increasing every single week, every single month. Okay, these traders all had 9 to 5 jobs, with some having kids, some having other commitments. There's no excuse. I was working 9 to 5, sometimes even longer, working for the NHS. I had really long hours. However, I had to make my time count, right? Everyone has time. You just have to make it, because if you want it, you will find a way to go and get it. And if you give us the chance, we'll give us our time and our effort, and we'll help you. We will make you a better trader. I can assure you. So anything that's added, that's extra, is no added cost. Okay, there's no catch. Anything that you pay today, for example, so if you pay the £1,000 lifetime, that £1,000 is for lifetime. Anything else that's added, it will be added for free. For example, those who joined Vertex from the very start, we've actually added multiple updates since April, including the order block strategy. All the members that have joined have received this completely free. Once you're in, that's it. You don't need to give us anything else. Our only optional extra is if you wanted to have a one-to-one with us, which we don't feel you need, purely because we don't feel that you need to spend more money. But we have our bi-weekly Zoom calls that you can ask any questions you want live. As well as our community, as I said, we give you our time. We will respond to every single question that you ask us. So invest in yourself, and we will invest in you. Okay, I know £1,000 is a big investment to make. However, I can assure you that you won't regret it. We will give you our time. We'll give you our effort, because we promise to invest back into you. We'll support you every step of your journey. So if you're ready to make the change, and you want to join our bootcamp in January 23rd to 24th, or if you don't want to join our bootcamp, that's fine. You can join our course. You can head over to our website. But if you want to join the bootcamp, this is just a recap of everything that you get. But if you want to join our bootcamp, we actually have a discount code for you. If you use bootcamp1 on our website, as you can see, you get £500 off our fee, and you get access to our bootcamp. Now, our spaces are capped. They're limited purely because we want to have a nice teaching room, because we will have a Q&A session the following week after you've done the boot camp, and we want to make sure we have reasonable numbers so we can give you our time and attention. We don't want to bombard our boot camps with a lot of students and not be able to focus. And that's another thing, is we do limit the number of students that join us purely because we want to make sure we give everyone our time. So we have like a slow access basically. So we make sure that we know every single student. So space in our boot camp, as I said, is limited. So make sure you utilize this discount code, and we hope to see you at our boot camp. And I hope that this webinar was useful for you. And I'm pretty sure, well, I hope that it was useful, but I'm pretty sure it was. And I hope the strategy works out. But I hope to see you guys soon in our boot camps or soon in our course. If you want to find out more, feel free to email us, message us on Instagram, message us on Telegram. It's completely up to you what you find. If you want to find out more, if you want to schedule a call with us, a 15-minute call, just feel free to message us, and one of us will be happy to go through what we do at Vertex. So thank you for watching, and I hope that you have enjoyed and you have now had enough of my voice by now, I'm pretty sure. But I hope to see you guys soon at Vertex, and I hope you enjoyed the webinar.